Decentralized Finance, DeFi, revolutionizing traditional banking systems. In recent years, decentralized finance, DeFi, has emerged as a groundbreaking innovation that is fundamentally reshaping the global financial landscape. By leveraging blockchain technology and smart contracts, DeFi aims to bypass traditional financial intermediaries such as banks, brokers, and insurance companies. This revolutionary shift is bringing the world of finance closer to a more inclusive, accessible, and transparent system, empowering individuals with greater control over their financial assets and transactions. This video will explore how DeFi works, its key components, its potential to disrupt traditional banking systems, and the challenges it faces. We will also delve into how DeFi is democratizing finance, fostering innovation, and opening up new opportunities for both retail and institutional investors. What is decentralized finance, DeFi? Decentralized finance, DeFi, refers to a new wave of financial applications built on decentralized blockchain networks, primarily Ethereum. Unlike traditional financial systems that rely on centralized institutions like banks and payment processors to manage transactions and provide financial services, DeFi utilizes smart contracts, self-executing contracts with predefined conditions on blockchain platforms to offer similar financial services without the need for intermediaries. At its core, DeFi seeks to democratize access to financial services such as lending, borrowing, trading, insurance, savings, and asset management. Through DeFi, users can engage directly with decentralized applications, dApps, that are built on blockchain technology, allowing for peer-to-peer, P2P, transactions, lower fees, and greater financial autonomy. The building blocks of DeFi. Several key technologies and components power the DeFi ecosystem, enabling it to offer decentralized alternatives to traditional financial services. Blockchain technology. Blockchains, particularly Ethereum, serve as the foundation for DeFi applications. Ethereum's smart contract capabilities enable programmable financial agreements to execute automatically without the need for a trusted third party. Smart contracts. These self-executing contracts encode the terms of agreements between parties and automatically execute once certain conditions are met. Smart contracts ensure transparency and security in DeFi transactions, as they are immutable and cannot be altered once deployed on the blockchain. Decentralized exchanges, DEX, such as Uniswap, SushiSwap, and PancakeSwap, allow users to trade cryptocurrencies directly without intermediaries. These exchanges leverage liquidity pools, where users contribute their assets in exchange for a share of transaction fees, facilitating decentralized trading. Stablecoins. DeFi heavily relies on stablecoins like DA, USDC, and Tether, USDT, which are pegged to traditional currencies, usually the US dollar. Stablecoins help mitigate the price volatility typically associated with cryptocurrencies, making them more suitable for everyday transactions and lending. Lending and borrowing platforms. DeFi lending platforms like Aave, Compound, and MakerDAO allow users to lend their assets in exchange for interest or borrow funds by collateralizing their cryptocurrencies. Unlike traditional lending systems, DeFi platforms do not require credit checks or intermediaries, offering greater accessibility to users worldwide. Yield farming and staking. Yield farming involves providing liquidity to decentralized protocols and earning rewards in the form of tokens. Staking, on the other hand, involves locking up cryptocurrency to support network operations, such as transaction validation, in exchange for rewards. Both methods have become popular within the DeFi ecosystem as ways to generate passive income. Insurance. DeFi protocols like Nexus Mutual and Cover Protocol are creating decentralized insurance products that allow users to insure against specific risks, such as smart contract failure, exchange hacks, or crypto asset loss. These decentralized alternatives eliminate the need for traditional insurance companies and the associated premiums. How DeFi is disrupting traditional banking. DeFi's ability to bypass intermediaries and rely on blockchain's transparency and immutability has significant implications for the traditional banking system. Let's explore some of the key areas where DeFi is challenging traditional finance. Access to financial services. Traditional banking systems often impose barriers to entry for certain individuals, particularly those in underserved or unbanked regions. Millions of people worldwide lack access to basic banking services due to high fees, limited infrastructure, and stringent regulatory requirements. DeFi, on the other hand, is inherently borderless and open to anyone with internet access. As long as users have a cryptocurrency wallet and access to decentralized applications, they can participate in DeFi's financial ecosystem. For example, individuals in developing countries where banks are scarce or expensive can access decentralized loans or savings accounts without needing to go through traditional financial institutions. This opens up significant opportunities for financial inclusion and equality. Lower costs and faster transactions. Traditional financial services, such as international money transfers or cross-border payments, are typically costly and slow due to the involvement of intermediaries, such as banks or payment processors, which charge high transaction fees. DeFi removes these middlemen, enabling direct peer-to-peer transactions. This leads to much lower fees and faster transaction processing times, even for cross-border transfers. For instance, using a DeFi platform like MakerDAO, a user can transfer funds globally at a fraction of the cost and time compared to using services like Swift or PayPal. Additionally, transaction speeds on DeFi platforms can be faster because blockchain networks operate 24/7, unlike traditional financial systems. Transparency and security. One of the core principles of blockchain technology is transparency. All transactions on the blockchain are publicly recorded and can be independently verified, making fraud and manipulation less likely. In contrast, traditional banking systems are often opaque, and fraud or data breaches can go unnoticed until significant damage is done. With DeFi, users have full visibility into the terms and conditions of their agreements, the current status of their assets, and the operations of financial protocols. Furthermore, smart contracts, when properly audited, provide a higher level of security. Once deployed, these contracts cannot be altered, ensuring that the terms of the agreement are executed exactly as intended. Tokenization of assets. Traditional banking relies heavily on fiat currencies and paper-based assets, such as real estate or bonds, for investment. In the DeFi ecosystem, however, the tokenization of real-world assets allows for fractional ownership and easy trading. For example, an individual can tokenize a property on the blockchain, allowing them to sell shares of that property to others and earn passive income through rent payments, all without relying on traditional real estate brokers or banks. This tokenization model extends beyond real estate to various other sectors, such as art, commodities, and equity markets, opening up new opportunities for retail investors. Ownership and custody. In the traditional banking system, banks hold and control your assets in savings accounts, investments, or retirement funds. DeFi allows users to retain ownership of their digital assets without relying on a centralized institution to manage them. Through private keys and decentralized wallets, users have full control and custody over their funds, ensuring that no one, except the user, can access or move the assets. This gives individuals more financial sovereignty, eliminating the risk of third-party mismanagement, fraud, or account freezes that can occur within traditional financial institutions. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.